people from around the world tune in to our experts at the Wealth Press Roundtable.
Okay, good morning, everybody. I see we got Lance. Hey, Lance, how we doing?
Hey, what's going on, Don?
Just seeing what's we got a nice big drop this morning here. I think, oh, there we go. We got Jeff. Good. All right. Morning, Jeff.
Hey, what's up, Don?
Yeah, just going about to do this thing here. Okay. Hey, hey, I'm super glad to have you guys here. And for everybody out there, thank you for joining. I will be taking over as host of this roundtable on a weekly basis. And I get to talk to awesome guys like Lance and Jeff. I get to find out what they're thinking. So yeah, really looking forward to this. Hey guys, we got a couple things we want to talk about today, but market's off pretty steep this morning. I'm curious, what do you think? What do you see about that? Any thoughts around that?
Lance, you want to go first, or?
Yeah, so a little sell-off today. I know I've been pretty quiet this week, traveling, so actually was a blessing. So I'm not long, a boatload in my book, so pretty happy.
Bag holding.
Yeah, right. I will say a lot of strength. We saw lots of call buying in Amazon today, right around 91.78.
Yeah.
So literally, I'll pull it up here if you guys want to watch. Literally 20 cents off the dead low of the day.
Mm-hmm.
Saw some call buying right here, and you can see these are the weekly 92 calls. They started buying them around 170. Now they're 260. They just move so fast, and that's the market we're in. Like I keep saying, you got to day trade. You swing trade. You hold a day or two, but Amazon showing some nice flow here today, and then obviously Tesla, huge rebound already intraday, and I'll be trading that one at 3 p.m. today after the close.
Cool. All right. Yeah, well, I think big part of the topic is earnings we're going to get into, right? But we're going to save that for later. What I want to really talk about right now, we got a Fed meeting coming up next week, February 1st, next Wednesday. The talk is 25 basis points. Let me know what do you think about that, Jeff? Is that underestimating it?
I think we're moving.
A huge game of chicken going on right now between the market and the Fed, right? And I was raised not to fight the Fed, but everybody seems to be doing it. So what do you think?
I think the Fed is becoming less and less relevant every single day. I think we're kind of, and I'm not trying to not answer your question. I think they're going to do 25.
No,
I think they're going to BS about, we're going to stay, whatever word they use, vigilant or, not accommodative, but we're not ready to take down rates. And, they're going to try to sing that song probably after they do 25 bips. What's interesting to me was last time we had CPI, we had a really muted response, and CPI has been a monster number. You've had 5% moves in the S&P, sort of thing, 10% move in individual stocks. Last time didn't do much. So, going back to your original question, which you asked and Lance answered, today's sell-off, normal life, right? We had a straight run up since 2023 started, ringing a bell. Mm-hmm. We have less than great news out of Microsoft talking about the cloud. So now we're back. We're shifting from this Fed inflation dominated narrative to the reality that the economy isn't so great. They're not firing a bunch of people because they're making a shit ton of money and things are awesome. They're firing people because they anticipate they're already making less money. They anticipate needing less people to make even less money. And because the cost of hiring new people sucks. If you're a business owner, you don't want to go back and have to rehire 5,000 people in 6 months. These are the kind of
you don't take that lightly, right? That's not it's like shutting down an oil field. That's a big decision, right? It takes a long time to get it back going up.
Multi-year decision, right? So they're telling you they think we're going to be in a prolonged lower revenue environment, and a lot of these tech companies in particular. So Softy comes out, says cloud's not awesome, and then you get this bombshell today where DOJ, which has been a weaponized war dog for the administration, is going after Google now. And so we're in a situation where tech's been under fire because of the real economy, but now they're going to be under fire from our government too. I don't know. There's a lot.
And you got TikTok. Don't forget about the TikTok getting banned, which is going to affect, your social media names like Snapchat.
It could be good though for some certain U.S. Social media names if TikTok gets banned. Like that's a good.
The whole social media space is just completely a head scratcher. I mean, it is. I wonder if we've reached peak social media, in a way.
You have kids,
Twitter is in a mess. TikTok's getting. What's that?
You have kids?
Oh, I got kids. And they're actually, a lot of them are trying to conscientiously back away from it.
Oh, that's good.
Of their own.
Are they older?
Yeah, it's high school.
Okay.
I think the youth, the Snapchat, the TikToks, the YouTube, like I was listening to Mr. Beast and he, was projecting to have 1 billion video views on some of his videos over the next year and 1 billion subscribers. He's like, here's my timeline for that. I do think your name's like Facebook or Meta, some of the stuff is going to fade away, but Instagram, which Meta owns, they're just going to keep probably buying some of these smaller companies out, right?
Yeah.
So I think we can't say social media is peaked. Sadly, I think
that was the point that I was making with the kids.
I think we're in version like 1 of it.
Yeah. I got a 9-year-old doesn't know, couldn't name you a Hollywood actor, but watch his like reels and like YouTube shorts, like for pure entertainment.
Like crazy. Yeah.
Like nonstop. And I have to turn him off of it. And he's a good kid. He plays sports and active, etc. But for entertainment, for relaxing, he's not.
That's where they go.
It's like not like what's on TV tonight or what movie's coming out. Like, don't care.
Yeah, those are the YouTubers or celebrities, not the I mean, I can't even name you one Hollywood actor under 30 years old right now. Brad Pitt. I mean, he's old. Who's the guy? Twilight, Edward.
Yeah. Lance, are you paying attention at all to the Fed? You trying to do you trade it? Do you look at that? Is that in your sites?
I would give the middle finger to the Fed, but I don't know if they'll cancel me. But no, I don't care. Whatever. I think they're all losers, liars, hypocrites. Yeah. I don't give a crap what they are. I mean, ideally, the best thing would be the market no longer cares about the Fed, but then the media would have nothing to talk about, right?
Right. Well, I mean, that's the big problem, and that's the big change in today's environment, at least definitely for the last year. And it's just dominated by Fed talk. It's the only thing to really that you could think about, right?
It's news stories. It's inflation's the hot topic now. There's Bitcoin that now now the Fed this week, and it just I could care less.
Well, everybody knows that, this is the thing. When you're talking about the Fed, you're talking about inflation, right? Everybody understands inflation. Everyone has an opinion on egg prices. Not everyone gives a shit about the cloud computer universe, right? Or understands how to monetize that. But everyone on the street's like, oh my gosh, like I used to pay $2. Now I'm paying $6.50. I'm paying $7. So, the Fed's doing a victory lap. We've got, Sleepy Joe does victory laps because we went from 9% to 6.8%, CPI inflation reading number. But things aren't really rolling back. Like the only thing that you can see kind of rolling back is like the really stupid bubbles we had in like used autos and stuff, which is kind of like trickling over to the real economy in the sense that you're seeing autos have like new car prices having to be slashed by Tesla, et cetera. So I don't know, like there's pockets of inflation that are super sticky. People don't care that it goes up a little bit less. What they want is it to go back down. Right. People want prices to go back down. So how do you do that?
Well, and that's, so I think that's the dangerous spot that we're in, that the Fed is in right now in particular, right? So on the one part, now you've got this kind of the energy in the headline, right? That accounted for a lot of the initial scare, right? But now you've got this, it's working its way through the cost chain, which includes wages, right? All of those things are now starting to kick in despite, the actual price of a gallon of gasoline. right? So
Right.
that's kind of flowing its way through. But I think the and then there's China, China reopening. I mean, that will, I think, could definitely have an impact. And the Fed is thinking hard about that. But I wouldn't be surprised to see them make a big, do 50 basis points next week
Really?
as a kind of like, I wouldn't. And I know you got this Tim Rose and he's guiding everybody down, and that and where the consensus is. But what they're looking at is an economy that actually, apart from, a couple of negative prints we had in GDP.
Let me ask you a question. Let me ask you a
Yeah,
question, because I like to get to, I like to get to the, let's get to the action. You say 50
yeah, let's do
basis.
it.
What does that mean to the S&P 500? Where's the S&P 500 3 days out from a 50 basis point decision? Because in my opinion, I mean, it's not a small move.
No, it's not. No, it's not. I think that's the market is absolutely pricing in right now, 25 basis points and a long pause, and a reasonable, not massively negative growth, just kind of like where we're going to get along, right? I think that's what they priced in, and they think there's going to be some sort of recovery. If we get a 50 basis point hike and maybe an aggressive statement, right? I think we're down another 200 on the S&P, right? We'll go down to 3,600, over the next 2-3 weeks if we get that kind of aggressive stance, right?
Yeah, so you get 50 basis points. You got the S&P, in my opinion, like, within a couple of days, by the end of the week, it's going to be down there. It can definitely give back all it's up this year, which is about 5% or whatever, close to 5%, and then maybe another 3 to 5%. So you're taking all this goodwill away, you're rolling it back for an extra 25 basis points. I'm just trying to think in terms of like, they do 50 and then they're like, well, we did our job and then we head for the hills, I guess, or what. But I don't know. I just don't see them. I don't see them having the power. I don't see them having the balls. I don't know.
And so I definitely get that argument. I definitely get that argument. What kind of what Powell has been saying, but to me, what Powell has been saying is like, look, you don't know what we're up against, right? I mean, that's kind of,
but he doesn't, but he also doesn't know what we're up against, right?
Oh, well, that might be true.
Because he spent, the first half of 2022 saying there is no inflation, it's transitory, we will never do 75 basis points. And then they did 75 basis points 4 times in a row. So in terms of like people listening to these dudes and saying, I think they know what they're doing, I don't know how you do that at this point.
Fair enough. No, that's a good point. Hey, you guys want to talk a little bit about earnings? I know, we've got, we're right in the middle of it. Tech is right. What are you seeing out there in terms of that?
It's the greatest time of year. I don't want to spoil everything because I'm trading Tesla today at 3 p.m. live. And I had Tesla calls earlier in the week, which were fantastic, which I wish I still had. But I'll be looking to get back in. Put it this way, Don. I have something today at 3. We're going to be trading Tesla. We'll be trading some correlated names like Lucid, Rivian, possibly ARC. We have AAL today after the close as well, the airliners. And then today, just to give you a quick rundown without spoiling everything, we have seen $6.7 million over a 10,000 lot in some Apple calls. We've seen, I would say, about 5 different orders in Amazon for a couple $1 million on calls. We've also seen about $4 million in Apple puts for earnings, $2.6 million on NVIDIA puts that capture earnings. Google, lots of flow there as well. And we are just getting started with the bulk of earnings. So, it is going to be a party. I will say this, Microsoft, a very, muted reaction. If we could pull it up, let me pull it up here, which I actually think is somewhat healthy. Microsoft only down, basically $6 and already bouncing very nicely here, as you can see. So we had, obviously you bought Microsoft calls, you lost money. You bought puts, you probably lost money because it's not down enough. But after seeing kind of Netflix was a pretty mute reaction too, just on earnings because it didn't move up enough. I do think we're going to start seeing some big oversized market makers move, and that's where you can really make, if you're right, money on earnings when you have what we call greater than expected market makers move. And I think that's what we're going to see with some names upcoming. I mean, look at this move off Tesla, $4 off the low already. I can't stop staring at it. But that presents an opportunity for traders like me. I don't, if I think the stock's going to go up, I buy calls. I think the stock's going to go down, I buy puts. And it's the biggest rush and thrill that you can have trading, in my opinion.
Now, do you think this reaction that they're not really reacting strongly to the weakness in the earnings and that sort of thing? Is it a lot of it? What do you guys think? Analysts have come out, they've beat them down so much anyway, they almost can't disappoint too much. How much is that factoring into the market's reaction right now, and what does that really say about what's going on?
Yeah, it's hard to have. You're not having anything break. Even you had like names like GE yesterday, Jane. I mean, they just didn't move, right? There was just no move. I know Boeing. Boeing even on bad numbers only down not even 3%. Nothing's broken yet, basically. Yeah. And you will have companies that will break, and you'll wake up the next day and you'll see them down 20, 30%, and you'll be like, holy crap. This company sucks and the puts are going to explode in value, if you have them. And then that is going to happen. Just because it hasn't happened yet, you are going to see that. And then you're going to have some companies shock expectations because they've been beat down so much, and no one was implying like, oh my God, Amazon's up 10%. How did I miss it? You're going to see stuff like that.
So you're seeing, so let me just hop in there. So really what you're seeing is it's not like this huge systemic kind of gutting, and nothing has broken yet, right? That's kind of been the amazing part of such an aggressive move by the Fed. But I mean, it's a stock picker's market. I think a lot of us we see the transition, right? We've moved, passive investing is done, we're in the stock. So there's a lot of room for selection and playing both. I mean, good Lord, that has been the way to go for the last 3 months, right? To have no axe to grind, right? So
you can't like, how do I say this? You can't like victory lap as a bull, and you can't short the market either. So it's a difficult environment. I kind of like how Lance has been playing it from the point of view of like, ties go to the bulls. I'm looking for calls, but I'm not hanging out in calls. And so what if I don't get the full move on the upside, I can always get back into it. So he was like talking like I had Tesla, he had Tesla over the weekend. It's a tremendous trade. Took the money, booked it. It ran some more, but then it's coming back today. Lord knows if they have shit earnings, it could come down more. But you have opportunities to add size. You got to be nimble. You got to be active. I've been doing my best trading with my most active like overnight system, where I trade 4 days a week, and it changes on a dime. Like last night, I came into this morning short Alcoa, like AA, and nice trade, nice home run trade, but that stock's been ripping on the upside. I'm like, any variety of catalysts can create a distribution event in the market. And lo and behold, you had tech weakness led to some basic materials profit taking, because we're in like this bizarro world where it's a stock picker's market, but it's also kind of like risk on in everything or risk off in everything that's priced on an exchange in dollars. So I mean, if I go back to like talking about the earnings stuff, I think that the market is so complacent about just like normal shitty earnings that you have to have like super shitty earnings. Super shitty earnings for people out there that don't speak the same language I speak means that you take that stock potentially out back and put the damn company out of business, which is the kind of stuff that you're seeing with Bed Bath and Beyond, et cetera, et cetera. So we're now in like the second stage of what I call like the bear market, like a more mature bear market, which means we're getting closer to the end of the bear market. Are we in a new bull market? I don't think so yet. I think we will be by the end of the year. But in the second stage of a bear market, you have the shock bankruptcy proceedings that come and go, where people are like, guys, we actually have to borrow money to run our operation. And our cost of capital, which used to be almost free, now means that we don't have a business. And so you're going to have that kind of like blow up thing happen here and there. but I don't expect it to happen to like the massive, big, like, solvent, well-run company. So it's something you
and
have
that's,
to
that's,
be
I like that argument a
look
lot,
out
because, what you don't have is nearly the kind of balance sheet weakness that you like we had. I mean, all the balance sheet weaknesses have been pushed up on the Fed, right? So
Right.
you've got select companies that do, right, but not
Yeah, yeah.
across the board.
Not across.
And so, and that's a really neat idea. If you kind of have these rolling, a bankruptcy here, a bankruptcy there, right? Mostly on the consumer side, or whatever. Maybe the oil patch. I doubt it, but a little bit of that. That's not going to be,
But look what happens like Lucid.
a,
I'm talking about Lucid, right? Lucid is a stock that trades in sympathy with Tesla, but not really, in the sense that Tesla's a much stronger company. Tesla sells a ton of cars. Lucid does not. Lucid does not. So, the farther you go out on the risk curve into shit stock land, the more risk you have for explosions.
Sure.
And so,
Right. And those are the stocks that are up most, this year. Like if you look at the worst companies in the world, like Lucid,
but not
$6.
Rivian.
Now it's
Rivian's
$8.50. These stocks are up 20-30%. These crap stocks that will probably be bankrupt by end of the year, and people
that's
can't.
interesting. And that's a lot different than a financial led, like the contagion side, right? So you're not really arguing on the financial solvency contagion side, just taking out all stocks and valuations. It's this kind of, hey, there's been a reckoning with a lot of these companies, a lot of easy money, and you can't ignore that's that they were overpriced and had business models that aren't going to.
So this is important to know. This is important to know. I mean, like, Rivian is down in 2023. The stock's down. It's off its lows, but it's negative for the year. Lucid is up 24%. But Lucid was a $30 stock trading under $10, right? So these are stocks that like completely donkey punched and hammered and stuff. But I still think the shock surprises you can have, the farther out you go into shit stock town, I think the quicker your trading time horizon has got to be, in my opinion.
And that's why
your time horizon, Jeff. Oh, go ahead, Lance. Go ahead.
It's so valuable that when we talk about like, let's say a shit stock, like, hey, Lucid's up 24%. We're not saying buy and hold it all year. We're saying from a trading perspective, whether it be a day, 2 days, a week or two, these names have presented just so much opportunities to trade.
Yes.
That, I would never buy a 3-month out call or put on Lucid, it's silly, but I would buy a weekly or maybe a 2 or 3 weeks out, a call or put, and trade it for, let's say, 2 to 3 days. And then boom, I'm out. And that is where there has been just so much opportunity. Like people say, Lance, you bought calls in this, now you're out. You just loved it. And now you're saying it's the worst company ever. It's like, yeah, I traded it.
Well, both things can be true. Both things can be true. Like I've been like a long-term investment hater of China. And for like the last 5 years, it's been an incredibly intelligent thing to be. For the last 6 months, it has not been, right? For 5 years, you saved 80% on some of these stocks, not owning them, right? Kicking them out of a portfolio. But I went long Baidu last week for the burn notice for a hot 14 hours,
14 hours.
Flexibility. To have that flexibility is really important. To be able to hold two thoughts in your brain at the same time.
To realize, there's two things that's going on here, for sure. Now, have you guys, I imagine have your holding times compressed to how much you're looking to take out of a trade? Have they shortened a lot? Like, give me a sense of magnitude here.
Like I'm holding trades a day, 2 days. And if they don't, and then boom, win, lose or draw, gone. If I hold the trade over a week right now, not good probability, it's probably a loser. And it's not working out. That's how it is. And I'm not trading like your Cokes or Pepsis or your boring stocks. I'm trading the craziest, the wildest movers that you can find out there. Your ARC names, your semiconductors, your names that move. Those are the names that I've just gravitated to because A, they're seeing the most option flow, but also B, they presented opportunities. I'll give you an example. I bought Dash calls that expire actually this Friday, last week. I bought the calls around at $2, added literally like 30 minutes later at like 170 because they drop so quick. Again, cheap options too. The next day, those calls were 65 cents. So $2 to 65 cents.
Yeah.
I'm not a wimp. I don't use stop losses because I know my risk management, right? And I know proper position sizing. I started adding in the calls around like 75, 80 cents, and I got out at like 90 cents. So day traded them in and out, right? But my cost average on the main lot was still right around $2. Next day, the stock was up 6%. Got back break even, made a little bit of money on them, closed them out. The next day, the stock was up like another 4 or 5%. So now those calls went from 65 cents or so to now they're printing about $4. Okay.
Yeah.
I think they got up to, even higher or so, but I didn't have the balls to hold them all the way through that. But that just goes to show you that you're having, Dash, it's one of those kind of like Roku, ARC names out there, those Lyft, those high flyers out there. It goes to show you that the option can go from 65 cents to $4 plus in a matter of days like that. You just, can you just handle the wild ride out there?
Well,
sometimes I can, sometimes I can't.
Well, the sizing is the whole thing, right? Like if you're like, that's why these little idiots always lose all their money because they go from like, I'm a zero to I'm a hero to let me take my mom and my uncle and my cousin Jimmy's net worth and try to replicate the same move I just did in Roku. And then invariably they're back in the basement flipping burgers again because you got to understand that those types of trades have a place in your life, but they can't be like all your money because like you will invariably, if you keep doing the same thing, get caught. And if you're scaling up while you're doing it, your risk of ruin is almost 100%.
Yeah,
it's like
you keep doubling down.
Mathematic concept in gambling, all speculation.
Yeah.
Right.
Like I'll give you an example. I had a 400 lot and then I maybe did a 600 lot of Starbucks calls last year. And I lost 16 grand on the trade. And then like 2 days after I sold it, they had some news and the stock was up like 6% or so. So I would have made a crap load of money if I would have held them. But I kept adding, 50 lot, 100 lot, 100 lot. So I had so many contracts that when the stock even did nothing or go down slightly, I was losing thousands of bucks a day.
Yeah.
Right. So, when we talk about position sizing and all that, we don't just say it to, cover our asses. We're saying it because, we have experience with it and we don't want other people to blow up, or
same thing happened with crypto. The same thing happened with crypto. I like crypto.
Oh, sure. Yeah. I mean, that was just, those are basically like trading options, right? I mean, that's,
right.
And it was just a brains in a bull market.
They sized in improperly. A lot of people, they abused the risk profile of the asset class, I want to say. 100%. And greed takes the wheel, like they say, Jesus take the wheel. Greed takes the wheel sometimes, right? And I was like I was on a private equity, private placement call for a very large crypto exchange that I will not name that I lost a bit of money on, but I put the smallest amount of investment that they would allow to put in it. But I was on a call with a few other people and this dude's housewife his wife came on the line and literally was like, shouldn't we put all our money in this? And that's when I knew. I was like, I have my initial indication of interest. My IOI went in half.
Hit that bid.
I was like, the Long Island housewife wants to go all in. Can I do I know I already committed. Is it too late to do half?
Yeah. Well, I think on that risk management side, I mean, that's I do a similar thing, right? Options, when I just go long options, directional trade, and the premium decaying, that's my stop loss, right? That's the trade, going to zero is what you can afford. That's how you size it, right? You don't always have to do that, but I mean, that's your stopgap. And if you can't stomach that premium, going away in not that happen in all trades, but in one trade, you're oversized. Hey, so now's a good time. I love getting some insight. I've talked to you guys a little bit before, been on these with you before, but I learned a lot here, and this is great. Lance, you got some stuff you want to talk to us about?
Yeah, and I was about to put on some trades, so I got to make it quick.
Come on.
I'm a donkey. Man. I'm supposed to wait till 3 p.m. I can't. So something big is happening today, 3 p.m. It's earnings season. institutional order flow, aka unusual option activity, goes crazy. I think I did a video the other day and it was like 2 p.m. and I had like 50 stocks to talk about. And I'm like, who the heck can take all these trades out there? But you'll get a lot of bang for your buck. So we see wild moves. We're not shooting for no 5, 2, 3%. It's go big or go home in terms of potential return or obviously loss. So we like to see wild moves in the trades. We do outright calls if we're bullish, puts if we're bearish. So you see some triple digit gains in there as well. All, again, very short term. Those were overnight, actually. Now, this does happen 4 times a year. So obviously that would be considered rare. Earnings is 4 times a year. And if you followed some of my work lately, you have seen that my scanner, which will be available by the end of the month, I hope. I actually got an update with it, has been going gangbusters. We see trades. Not everyone is a winner, to cover my butt, but it has been pretty hot lately. This year has been fantastic. We have seen big trades, names like Lyft, CSX, Tesla, AMC, Netflix, PayPal, Roblox, and right now we are seeing more and more names. Why? Because it is the earnings season kickoff this week. Next week, the following week are going to be absolutely boom or bust for earnings out there. And we have the mother of trades coming. I know personally I have more money than I care to disclose in this stock. And I just bought my mom a Tesla, actually, or at least the order form. Who knows if I'll get one in stock soon. And we have names like Tesla and AAL. And actually one name I wrote down today, Flex and Las Vegas Sands. We'll be looking at some of the biggest stocks, not only today at 3 p.m., but next week and the following week. And we're going to hunt down these trades. Yes, we're ready for the kickoff. We're going hunting for unusual options and looking for our next possibly overnight trade. Okay, here's the deal, though. Let's break it down. And we are going to have the trade room together 3 p.m. We want to get them back to some of the biggest trades. So you have to trade them before the market closed today. So 4 p.m. Eastern time, hence why we're going live today at 3 p.m. Maybe we'll do some after hour stuff too. Who knows? You know, if there's action, I'll be around. So today, January 25th, 3 p.m., you can trade with me. And for the next 3 months, we trade options, short dated, cheap options. So if you have a small account, it is fantastic for you. You will see my screen, my real TD Ameritrade Thinkorswim right there. And we'll be placing some trades out there. Sometimes we do charge a lot of money, but today we have a deal. You won't spend thousands of dollars at all, not even $600, which is my normal Costco trip for a family of me. But none is going to be sweeter than this. Earnings season kicks off and goes on for weeks and weeks. So you not only get the live Tesla earnings class today with me today, but you also get trades at least 2 a week. I think I average 2 to 3 a week. And then earnings season, obviously it's busy for the next 90 days. It's part of the weekly Blitz alerts. And we're looking at big institutional order flow in the options market. All right. It's going to be fantastic. And like I said, you not only get the class today, you get 3 months full of alerts. So you might be asking, Lance, what is the special deal? Well,
What is it?
Don, you get your
Let me hear
trades.
it. Let me hear
your
it.
trades.
It's earnings season, man. Let's go.
Let's go.
Text, Telegram, and email, and well, live today with me. You get all the education stuff. Obviously, you know, we try to make education a big thing there. But what is the deal? You're probably asking. It's not $2,000, which I reckon we sell on the website for. It is only, God, where is it? It is only, I think, like $297. $299. Okay, $299. You get a 30-day money back. If you don't like it, call in, get your money back. I will not get my
That's like
my
three
lunch.
Lance. That's like Lance. That's like only like 3 tomahawks at Costco for you.
It is less than $100 a month.
That's
Put it
wild.
that way.
What a deal. What a deal.
And it's only $2.99. The link is wealthpress.com/blitz. It is the most, I would say, famous, popular service that I have done. All the track record gets audited. It's been around for over 2 years. We have an audit guy who does it all. So all the trades are real.
I think it's worth it to join it. I think it's worth it to join it at that price just to get today's trade or like one day's earnings trade, much less an entire quarter. Just my point of view. Because this is such a juiced up jet.
There's so much going on. It's absolutely. They're making big moves, right?
Now a lot of these things, like you got to wait like 2 weeks for someone to issue a trade. That's not my boy Lance. It's coming. It's going to come fast. It's going to come heavy. And I would join it just today, just to have it, just to get that trade.
If you do have it, you can call 877-212-2646 to renew, or if you want to order through the phone, we have a customer support team who will take your call, or you can visit wealthpress.com blitz alerts. Oh, we have a special lifetime offer. And I know we have a lot of people on lifetime, so thank you, because that's how much people love the service. It is a very affordable deal if you want to try it out. Like I said, it's only $2.99, and it's wealthpress.com blitz. You get a 30-day money back guarantee. Call in if you want lifetime. You get at least 2 trade alerts a week. On average, we do 2 to 3 trade alerts a week. So that's over 8 trade alerts per month that we actually track in real time. And I usually do bonus trades as well in the meantime. So it is very, very fast, very aggressive. If you have a small account, you'll love it. If you're into buy and hold like Pepsi for the next 2 months, this is not for you. I'll just be honest with you. If you want to trade bonds or hold stock and write covered calls against it, this is not for you. This is buying outright calls, or if we think the stock's going to go down, sometimes we do puts, but mostly long calls. And I would say at least have a $2,000 account. You have a cash account, margin account, regular account, IRA account, Robinhood, Schwab, E-Trade, Fidelity, Interactive Brokers, TradeStation. They all work with this service. Thank you, Texas Joe. I'll see you today. And I think that is it. Where's the slide? There it is. Maybe we'll make it big. Great tool. Texas Joe says have a lifetime. Thank you. Thank you. Thank you. Woo. Don, thank you for hosting and your time.
Yeah, Lance, thanks, guys. Jeff, appreciate it. This is great, guys. You should, there's a couple links in here in the chat. You got to join up. I mean, that is a lot of trading, and there is a lot going on right now. You want to be where the market is, and this is it. This is it, right in the middle of earnings. So let's do it. Awesome. Great. Well, hey, guys, I appreciate you being here. This has been a great conversation.
Great time. Hey, awesome job, man. Way to take the trade. Let's go.
All right, let's do it.
Pretty soon we're gonna have Don slanging some S&P over here, and
we're gonna turn the heat up in that sauna. We're gonna turn the heat up on you in there, Don. Let's go.
Oh, does it look like it, doesn't it?
Yeah.
My own personal handiwork.
He's in the
Or a
infrared
cigar
hot
humidor.
sauna. He's in infrared hot sauna, being healthy. We'll say.
I did that this morning.
See?
Yeah. The awesome. Hey, Laura, I have no idea exactly how to land this thing. So if you got any suggestion, otherwise, I think we're gonna call it a day. But guys, click that link, join, yes, Bearded Triad. That's a good looking group.
We do
I think Laura posted it in the thread, Don, right?
I did. We do. Hi, guys. I do have an announcement to make. That roundtable will be starting at 10 a.m. as of next week. So going forward, it'll be at a 10 a.m. slot on Wednesdays. Don is our new host. Look for a rebranding. It's going to be Trading Pub Roundtable with Don Yocum at 10 a.m. in the weeks ahead. So thanks all.
Very awesome.
I'm going to leave this screen up for people in case they want to look it over for a little bit longer. But thank you guys all for joining us.
We might have to be called the Bearded Triad. TJ said.
It's a good one.
Blitz is not day trading, by the way. We're holding positions overnight, so you can have. There's no day. Well, I shouldn't say there's none, because sometimes the options move quick. But you don't have to be pattern day trade. We're holding positions overnight.
Yeah.
Make that clear.
Oh, right. So
I think
you
any
don't
of
have
our
$25,000 in your account to do day trading.
Yeah, I don't think any of our systems day trade. If I'm
No,
correct.
I think it would
Unless you
be
get your target. Yeah.
Stuff would move
Marvelous.
quick
Okay,
to do that.
guys.
All
Auf
right.
Wiedersehen. Have a great one.
Thank you.
See ya.
Thank you. Little send